Right, good morning everyone. Hope everyone is well and had a good trading week. I just want to go over why I didn't actually take any trades on mainly Thursday. Obviously, I don't really trade Friday as it is. So, yeah, starting off on the daily time frame. So, on the daily time frame on DXY, you can see we've had 4 bearish candles in a row, but more importantly, we've had 3 big expansion days. So when you have 3 expansion days, there's a high chance that the following day after may be a retracement / consolidation day. Obviously, this doesn't happen all the time. As you can see here, we have more than 3 in a row here, but you want to be more cautious when you do see big expansion days. Say if we go back a bit more. Here we had 2 really big expansion days. Third day, a small expansion, then a retracement, then continue. Here, 3 big expansion days, then look how much smaller the candles get. Then we have a retracement, and then we go again. Here, 4 bearish candles, and we have 2 big expansion days, retracement. So you see what I'm getting at here. Here, expansion days, retracement, but as you can see, sometimes it does go more than the third day. So I'm not saying every time you see a third day candle, you have to not trade. Or you've had 3 day expansions, on the 4th day you can't trade. I'm not saying that at all. I'm just saying you've got to be a bit more cautious. And we come into this daily fair value gap. And also, on GU and EU, it was exactly the same thing. We had 3 days big expansion, 4 bullish candles, and 2 really big days, and then a third day. Like, this is a big wick to the downside. So there overall we had big expansion. So that shows me that the chance of potentially extending even further is lower probability. Plus, this will happen from Monday, Tuesday, Wednesday. And if you just think about the weekly candle logic, like a lot of times the weekly candle, it'll start here, it'll open, if it's bullish, it'll open lower, push higher, then make a weekly range and close like this. We want to be trading this expansion part. We don't want to try and catch the top and get the small pullback here, and we don't want to get the small sell at the start. We want to catch the expansion bit in the middle, which is what we did last week. So using that logic of the weekly candle, Thursday could cap off the weekly range like it did. So it capped off the bullishness on EU, and DXY, it capped off the bearishness. Sorry if you hear me cough, I've got a bit of a cold at the minute. But yeah, so it's capped off the weekly range. So you have to just be cautious. And if we go on to DXY, going into Thursday New York session, which I said would be the session I'm trading. So say you were looking for continuation trades. You have this bearish fair value gap. But what should be your first thought being, okay, maybe this may not continue bearish. Look so this candle closed at literally dead on New York open. So it started at 8, 4 hours is 12. Look how deep we closed into this fair value gap. Look, like it's such a bullish candle this is. We've had a wick to the downside and literally disrespected this whole fair value gap. Which, if we're bearish, you don't want to see that. Because if we were bearish, you'd want this fair value gap to not get closed above the 50% and continue lower. But once you see this closure on the 4 hour, this shows you that, okay, we may go for this high and look at this fair value gap. So even on the before we've even looked at the lower time frames, the daily and the 4 hour suggesting that sells may not be the play on DXY. Compare that to EU, same thing. Obviously this was that closed at 2 p.m, but more so on the hourly on EU. I was looking at this key level to begin with. So this is New York session start here. There's no trade on this bullish candle because we didn't hit a key level. I was looking for this key level. And then as soon as we close below there, that invalidates that. So first of all, your thought should be, okay, maybe this may want to go lower. Even if you were still thinking, oh, it would go bullish, and you seen this candle close up here above these down close candles, creating an order block, you have your stop loss at the low where it should be, because obviously essentially this is a stop run. Look at what your first target is. Your first target is a 0.9R. Is that worth putting money behind? Absolutely not. Like, I hope none of you take 0.9R trades, because like I've said, when you're trading, your first target should at least always be 2R to make the trade worth taking. And if we look on GU during New York session, if we go back to the 4R, so this candle here closes 10 a.m. Look what we done. We disrespected this fair value gap. So to me, there's a chance that we can go lower because we're disrespecting bullish PD rays. So on the 4 hour on DXY and GU, you've got signs that, okay, we may not be continuing bullish. And then the 1 hour on EU at the key level we was looking at, there was nothing we could have got into for bullishness to buy. And because my bias was still bullish, I wasn't looking for sells, so I'm not going to sell on this candle here. And even when we got a closure below here, there's no framework for us to even sell. So just them things alone. And if we look at the daily low probability filter, is that overextended daily weekly candles? Yes. So straight away you've got a daily low probability filter. We've got one of the main ones that's already hit essentially. And then if we look at some of the others, let's have a look. Lack of clear T-bond, this one. So this was New York session low probability filter. So at the time, this was going bearish at 1 p.m. So these were going bearish. So this was confirming that, okay, price may not want to continue higher because of, look, we had the bearishness on bonds. So you wouldn't be looking for buys still if all your intermarket analysis is telling you, okay, this may not be bullish still. So we've got bonds confirming the bearishness on pound, and obviously this was because of euro strength. But then if we look at dollar at 1 p.m, we had bullishness as well. And then we had obviously manipulation back lower, and on USD CAD as well. I was looking at this 15-minute, that's why that's there, but I didn't take anything. I was just looking, but as you can see, we had no stop run for me to frame the idea. And the target is just in the middle of nowhere, just to let you guys know. But on USD CAD, we didn't even have any stop run or anything to even frame a trade to go long. And even to frame a trade going short, we've been displacing, making bullish fair value gaps, going it up. I know it's a small one, but it's still a fair value gap. There's a small one there, a very small one, as you can see. And then also we have another one here. So this shows to me that, okay, price is slowly starting to flip bearish. So when we take out this high here, you have to wait for confirmation of order flow to flip back bullish before you even think about selling. So just alone, we have EU and GU. The risk to reward on the buys, if you want to take a buy, is not there. So that's one reason why you can't trade. We didn't have a bearish bias, so we weren't looking for sales. We were invalidating bullish PD rays on higher time frames on DXY and pound. Plus the daily time frame, we've just had 3/4 very big days where we caught our trades. And one thing I do want to show you guys, look how when we come onto the charts, you don't want to be sitting here for an hour thinking, where's the setup? Where's the setup? Obviously, I know here on EU we originally got stopped out on this position when I entered along here, but as you can see, look how easy. Stop, run, displacement. Stop, run, displacement. Stop, run, displacement. Same on GU. Stop, run, displacement. Stop, run, displacement. See how, look how much more cleaner these setups look compared to a setup like this. Like just look at the framework. Stop, run, and then you get an order block. Stop, run, and then you close above these two down close candles. You get your order block. Here, stop, run. Obviously, this one's a bit harder, but you get a closure above this, obviously all the way up there, but you still get a stop, run, order block. GU, stop, run, order block, close above, goes. Stop, run, you create a 1 hour fair value gap that you can have an entry off. Here, stop, run, we took this trade, order block, trades higher. So when you come into the charts, your setup should just appear to you like instantly. You shouldn't have to sit on the charts for half an hour, 45 minutes trying to find a setup. It should just point out to you so easily, like these setups were. And that is the difference, because the longer you sit on the charts, all you're doing is convincing yourself, okay, I want to take a trade, and you'll make scenarios up in your head to try and convince yourself that there is a trade, where realistically all you should just do is close the charts. Just close the charts and go and enjoy your day. Because I know on EU, some of you may be like, oh, we've run this low and then we had a bullish candle, but you took out buy side liquidity here. So your first lower time frame target's been met, so you can't continue looking for trades. Remember what I said about when we take a high, you do not want to see it reject like this. You want to see it close above and continue. So even if you did decide to enter this trade after the 1 hour bullish close, this close here alone is awful for your trade, like we've gone through so many times. So yeah, I just wanted to explain to you guys why I didn't actually trade Thursday. Simply because we had the things on the daily and the 4 hour indicating that, okay, we may not get continuation trades on EU and GU. Plus, on the 4 hour, we started to disrespect bearish PDRAs, on DXY. So I'm not saying you can trade this retracement as such. Like, you can trade it's essentially a TGIF or weekly cap, whatever theory you call it. I'm not saying you can't trade them. You can, because obviously here we had, like, we broke lower, closed below the 4 hour fair value gap, use the inverse fair value gap. I'm not saying you can't trade them at all. What I'm saying is you just have to be careful for continuations when the signs already are there that, okay, price may not continue higher now. So yeah, I hope you guys got something from this and understand why I didn't actually trade on Thursday and Friday. And also, we're up 6%. 6% for a week is a very, very, very good week. So why would I want to try and risk more of my capital when now we can go into next week? We're up 9% for the month, 6% last week. And like, there's just sometimes you just have to think logically and think, okay, like, my main thought here is I want to protect my capital. Because you could take a loss Thursday and that ruins your mood, or say you take a loss and it broke your rules, and then after that you go on a tilt. Instead of ending the week 6% up, you end the week 2% up or 3% up, and then your mood for the weekend is then ruined, and then that rubs onto your family, your friends. So you see how the snowball effect by you just making one shit decision can affect the rest of your week. Whereas me, I'd rather just keep my profits. I'm happy with what my performance this week. So why would I not want to stay happy? But yeah, if you have any questions, please do let me know in the chat. Obviously, I want to help you guys as much as I can. I'm really, really proud of you guys passing accounts, getting some people getting payouts. I can see the improvement in some of you guys. So yeah, keep up what you're doing. have a good weekend, and we'll be back to it next week as always. But yeah, have a good one, guys. Thank you.